Hey everybody, today is Saturday, January 22nd. This is going to be an update for ATER stock, Ethereum. So basically, I haven't done a video update for Ethereum in a while because for about a month, it was following AMC pretty closely. And I do AMC videos and some other things, so I'm going to track a few different stocks on my own time. Obviously, my own portfolio has a few different things in it, but for ATER, it was almost 1-to-1 for several weeks there, and we had some spring action going on, and then basically those springs started falling through as the market became more and more bearish. The points in which you would normally see a breakout were breaking down, and we could not specify a specific bottom. And basically, we've already passed below the more recent bottom, which happened back in August of 2021. So all that being said, if you're looking at ATER from the outside, it doesn't look like a winner right now because of just this constant sell-off. We had this major reaction that occurred on this big sell-off here, and at this point, we're just searching for a bottom. And even from a Wyckoffean standpoint, if you were looking at this on the whole, you would say that this was possibly the phase B bottom, but at this point we've gone below it. So the question is, are we now in a sort of an actual spring? And is it gonna spring, right? And what's it gonna look like? Well, I wanted to just kind of go back to bare bones and keep it really simple today. I don't want to talk too much about fractals because for Ethereum anyways, it's kind of a mess. I did map out a fractal sequence and I've been using it here and there, but more recently we just kind of lost it. And it's the same for AMC in some ways. The only fractal that seems to be repeating is this, what I've been calling a spring fractal, but it's actually just an accumulation fractal. Now, there's good news to that, which is that if this were going to, and it is, by the way, I mean, these institutions that play these stocks, they play both sides. So don't get me wrong. They are shorting it down. They are lending out their shares to short the stock. The institutions that bought in your Vanguards and your BlackRocks and whoever else owns these stocks, they are buying the stock and holding it long, right? And they will sell as we're going up. They buy at all these different levels and then they sell as it goes back up, and they're out of the play and ready to short down, right? Before retail is. And that's just kind of the nature of it. So with the recent news in the market and everything just going kaplooey, right? Turning into a very bearish outlook. And I'm not going to get into too much on the bigger stocks, If you don't follow the cues, you should follow them and SPY, and it's at the VIX to some degree. But looking at these, the S&P, right? You definitely want to look at those stocks, your big ones like your Apples and Amazons and stuff. But basically, yeah, I think that we're going into sort of a bearish phase, and there's going to be some winners and there's going to be some losers. And what it means for ATER is that where we hit specific points, the market wasn't ready to turn bullish. And, it's hard to deny that this particular reaction, this was a very strong reaction off this trend line that we had before. And this was basically, it says 405, but really it's our 397 level, the quote unquote bankruptcy level, right, for the stock. And that was a very bullish reaction. And then it kind of rode the top of that trend line. It never really broke this outer trend line again. And this is a very loose trend. It's not meant to be perfect. It's more of a general directional trend. One of the problems that I've had with ATER is that these trend lines, they don't like trend lines on this stock. It tends to be that where you find one match. So if you're going from Wix, you'll find that, it matches one, but it doesn't match the other. And that's pretty consistent all around. So the best thing to do is just kind of pick one that seems to sort of hit major spots. You can see here that this one appears to have broken back into the wedge. If you were to pick like a tighter one, like something down here, then it doesn't really look like, and use like these upper lines, then it appears to have been above it like the whole time, like it never went back in, and it's actually bounced off of it and it's coming back down to this lower line. Does it matter? Well, the short answer is yes and no. I mean, it matters. Like this looks more accurate to me than these top points. I think these top points would be overextended perhaps. But you know, I think that it matters because it matters to other traders. And I've heard people say that they think that, you know, TA is nonsense. It's snake oil and all this other stuff. Well, it can be. I mean, to some degree, no TA is perfect. It doesn't have to do anything. Like a stock can turn directions and change directions at any time. But so can like your bus driver, right? Like when they're following a route. I mean, it's not, and I use that comparison. Somebody said it was a false equivalency, but like, look, if you're already on the bus and you own the stock, it's not a false equivalency. Like the people who drive it, yeah, like they have free will. I mean, an institution could decide that they're done with the stock suddenly and they want to change directive. And I think to some degree that's happening on a lot of stocks. But then you got to look like macro scale, large term, like where are we? And is it really that clear cut? Because I know a lot of people got in right here, and that was the big trap, right? The big bull trap. And they're not expecting you to hold all the way through here. And all they've been doing, I guarantee you, all they've been doing in this region down here is just shaking out paper hands. Like they're looking to margin call people. And if they're not getting margin call, they're just waiting to see who sells off, right? Stop losses and whatnot. And while they're doing that, they're also picking up shares that they're going to sell back to retail on the way back up. People who are FOMOing in again, right? They have plenty of people that want to buy when the thing runs hard. So when we look at the macro here, okay, this entire picture, it's important to note that back here during COVID days, we did have a run up, and it ran up 500%, which is significant. And then it ran up again, right? From that middle line, another almost 500, it was like 450%. And it has struggled to come back above this line at about $9.30 or so, right? Which is one of the original, you can see it from way back. It's one of the original resistances. And when it did get above it, it ran. And here it did bounce off of it. You can see that first touch. It bounced off that region as a resistance. It got above it for a minute, and then it was just like, no, right? We're not going into that region. We're going back down below it. And then ever since then, it's been downward. They weren't finished, right? And there's a lot of theories about maybe why that happened and so on and so forth, and why the float like exploded right there, you know. And I think most of it is just retail involvement, seeing the short interest numbers and having people just sort of jump on board. But they trapped. I mean, it's that simple. I don't like to mess around with this idea that the ape community or the retail community is always in control. I think that's silly. I think there's a competition going on, and I think sometimes you have to just step back and say, look, you may think that you're in control here, but the truth is there's a lot of paper hands in this stock. And if we look at the OBV, you'll see what I mean. All right. This is really disappointing. This is probably the most disappointing metric that we have. So there is obviously this massive push up, and you can see that the OBV is still really, really high. I mean, that's a good thing. That's not a bad thing. This is still a very bullish looking chart. However, when you look at specifically this region, you can see that it's working, right? Like especially in recent days, that we went from having a very, let me try to scale this a little better. We went from having basically a bull trend line here, upward, okay, which is increasing, right? Increasing. And when they finally broke that 397, more recent days, you can see they're dropping the OVB. That tells me that people are selling off. More than likely retail, because I guarantee you a lot of this volume here is not retail, it's institutions, and I don't think institutions are going to sell because they're in it for the long game, right? And they're lending out their shares, right, to be shorted. So we have to understand, like, big picture, yes, like this is still a bullish play. Look at that. That would be really interesting if we got a double bottom there. I think it'll be close. I don't think it's going to double bottom, but it would be interesting. But even still, like, yeah, I mean, look where this was. So this is now at what, 290, and back here on October 11th, the price was almost 850, something like that. So to have the same on balance volume at 850 and $2 is significant. That's very bullish. That means that, yeah, like they did do a lot of shorting here. I think shorts are mostly to blame, and sellers, sure. I think this is a lot of selling right here, the on balance volume, right? But I think that largely a lot of it is shorting, and there's still a huge number of people invested in this play. Now, before it's all said and done, it could come all the way back down to here. Like, we don't know. But I do say this, looking at general trends here, I think should encourage you. So I'm going to sort of wrap it up. I don't want this to be really, really long. If you noticed, every time there's like these kind of bull structures, one way or another, we do get this sort of reversal. And I know it's not perfect, but it's important to note that this is part of that W breakout pattern that I identified really early in this chart, where you have a type of ascending or descending wedge, and then you get this breakout, right? And it's essentially acting like a spring action. It's not really a spring, right? Because this didn't go below the previous trading range. However, it's this idea of like you have this dip, and then you get to pull in some more liquidity. And one of the things I've been doing on AMC is that I go through and I look at, okay, when a dip occurs, right, before the dip, so let's go before this dip, what was going on with volume? And you can see there's all these gaps, right? And these volume gaps, they leave these gaps here because when they come back up, right, if they're ever going to come back up, they're going to re-explore. And in this case, there's just a ton of them. But let's just mark the biggest ones right here, and I'm going to show you what I mean. Okay. And when they come back up, you can see they obviously got a lot. They had a lot of buys here, so they're accumulating shares on the way up. But notice that we still haven't really gotten to these regions yet that we marked out. So eventually, boop, look at where the volume, right, tries to get volume. All right, you can see that here they actually did increase the volume. So back in this region before it printed, all right, you see how barren this was. And then look what happens here. Yep. So they've got this region traded now, significantly more traded now. There's still some gaps in liquidity. And all that means is that region hasn't really been traded very much, okay? And as they go along, you can see that these regions that previously, right here, look at this, very, very low volume, and we could have drawn this almost all the way down to here, right? That this becomes like a heavily traded region because they're navigating this like they're navigating a board, right? And they're just trying to coat every region as much as they can. And by the time you get here, I mean, this is the largest, by far, the largest traded area in the stock. This region right here, which is right around like the beginning values of the stock, right? So it keeps coming back to this center value. So as you look at this, right, you can fast forward and you can say, okay, well, this is no longer a region that really deserves to be traded, but of course, they don't look at this always like way back in time. They're looking at it like a year out maybe. So they're going to retread the same territory. Now, looking at going up here, there's a point to all this. I want you to see like let's just mark off like the areas that have really low volume. All right, just a specific gaps here. And anything that's got decent volume, we're not going to mark off. All right, this area was just largely untraded. Really, this whole area right here, largely untraded. All right, and then we go across. Oh, look what area it stops in. We still haven't traded this region. We still haven't traded this region. We still haven't traded this region very much at all. So let's keep going. Let's see where they trade. Well, there it is. They traded this region now. Right? This region is done. So we don't need to continue that one anymore. This region's been traded. This region's still not been traded very much, although it's starting to get there, right? And this region got a little bit. You see that? There's some stops along the way. At this point, we could even say like, oh, it's not filled out, but yeah, now it definitely is, right? And even this region, which previously had like nothing, look at where they stop the stock, right? They're stopping at opposite these larger areas that they passed over, okay? That's exactly why, people will say like, oh, it's support and resistance lines and stuff, but really like it's not at the same time. There's not a lot of correlation if you look across. There's not very many that were created support and resistance wise. So when we get to this point in time, we're almost to where we are currently. And you can see that at this point in time, this has a ton of volume in this region. It doesn't need to be traded very much. So what does it do when it gets to this point? Well, it skips over it all. And you can see that, yeah, that's a bunch of volume, right, on the downside. But let's just look at now from like a year forward, okay? And you can see that some of these areas maybe harken back to like the beginning. See, this one kind of does, right? But you don't want to go too far back in time. It doesn't benefit us to do that. So let's just look at then what happens after we get here. Well, there you go, right? So this is about a year's worth of time. At this point, everything's been really heavily traded. You can see that this region acted as a resistance. And what's interesting is if you go back here, you can see that this right here is basically the most heavily traded region. And there is kind of a gap here. They didn't really care to explore it. So if we were to just look at the most heavily traded region in the previous 6 months or so, it was this region right here. Okay. And look at where we stopped. So yeah, like it hit this trend, it creates this trend line, right? But it really stopped because they had already explored this region on the way down. They weren't ready to go back up. So they hit this liquidity wall basically. And they weren't ready to unload shares there, right? Like they didn't want to. Like they didn't want to keep buying there. They had already bought there. They were still wanting to distribute, right, for the rest of this way. So all the shares that were bought in this region, and you have to understand, this is quite a bit of trading going on, all right? 1 million, all right, here. And if you look from here, so we're talking about 2 to 3 million shares possibly that they're trying to distribute. And and also short, right? But they're waiting. I mean, they're not going to do it all at once, is what I'm trying to say. So if you let's look at now this region. And again, like I already kind of mapped it out, but you can see that I have these gaps, right? And some of them, as you go along, some of them get filled, right? And then the gaps sort of change. So now if you come to present day, yeah, you can see that a lot has been traded in this lower region, but not a lot in these little pockets. And these are the pockets that are going to be stopping places when they go back up. So especially above here, which is largely unexplored territory. You're going to have a big battle right here, right, where there'll be a lot of accumulation. But once you get over this midline, there's not really any need to sit out in this area. So the good news is this is a lot of volume. So even though I marked these areas out, like this is heavily traded regions, most of it being selling, but also some buying. And you can tell that when they get back to this region, they're not going to have to spend a lot of time there, which is good news. So what that tells me is that they've already explored this region quite a bit on the up and the down, right? And another thing to note is a lot of times what you'll see in a stock is that it either has an ascending accumulation and then quickly sells off, or it has a very quick buy-in and then a slow descending accumulation. So they tend to do one of two things, right? If you have a zone, a liquidity zone, they tend to either go above it very quickly and then come back down through it and kind of explore on the way down, right? That's one option. Or what they'll do sometimes is that they will explore on the way up and then come back through it, depending on which direction you're going and like what they want to do from there. It doesn't mean, by the way, this doesn't mean that it has to then continue down. Sometimes you'll see this with what we would call like a retest, right? Where it looks like an ascending wedge or something. And then when it breaks, it comes down, it retests the previous region at like a fib level, and then it continues up. They don't need to do price exploration. They already bought their shares, right? They're ready to move on. And they distributed what they wanted to distribute here. They sold what they wanted to sell. So when you're looking at these things, it's important to note that the way they navigate it, you can see that with ATER on the downside is they like to do hard drops followed by accumulation on the buy up. Hard drop, accumulation on the up, hard drop, accumulation on the up, hard drop, accumulation, hard drop, accumulation. However, this was kind of one that I think maybe took them by surprise a little bit, because you do get a huge increase in volume. It went way over and beyond, right? And it basically got knocked out above that midline at that previous region that was heavily traded, which now looks like nothing, right? But based on the on-balance volume, it changed quite a bit. So my point in saying all this is you see these regions of this like bar coding, right? They're heavily traded regions. And even if we got rid of this right here and you say, well, they're just distributing shares. Well, yeah, I think right now you can see that the pocket that we were in right here is a pocket that they're going to want to explore. So my bet is even if they went down and retest this line down here at 264, which is a possibility, this is a major trend line here, and this would be like the equivalent of a double bottom on this trend line. My thought is you're probably before that, you're going to see this move up, test this region here, and get back to the 339. And then from there, if it broke above this line, you should have a very quick move up to back to 450 or 460, because they've already traded this region very heavily. They're not going to want to hang out there. The goal isn't to give people an opportunity to get out, right? Whether it's a bear trap or a bull trap, the goal is to just make it really difficult, right? So whether you're moving down really fast or up really fast, they're gonna do it in a way that skips over regions, right? That they don't want to explore themselves. Like they don't want to give people the opportunity, right, to get out. So all the shorts that are in here, I mean, we know the short interest is super high. As we pump up way past this, right, it's not going to just like suddenly drop back down. Like you'll come back to retest this region, 425 probably, $4 maybe. But remember how this acted as a resistance up here when there was like a high volume pocket? This will act as a support down here, right? Because they're not going to want the shorts that got trapped on the moves up to be able to get out. So they're going to just push it up from there. And they don't want to explore this at all. So they're like, no, we're not going back in there. I don't think so. And they'll move it on. Now, that being said, there are some natural stopping points in here, which I think will provide some like minor, here and there. But until we see that happen, I think everybody should be looking at this and just saying, okay, let's look at the basics. Let's look at the fact that we may be in a bear market and there's nothing you can do, right? Like you can't, as a retail trader, make this stock go up yourself. So you're really just at the mercy and you're just waiting for the market to turn around at this point. And it's possible, you can see that on the whole, this was not explored very much down here. So when we say, yeah, is it possible that this thing drops to $1.58 or whatever? Look, I don't want that to happen either, but it's possible. I mean, it is possible that you come back down to $1.77 and get that double bottom, so to speak, or even further, $1.42, right? And if that were to happen, it's a full-on reset. And that means that the new price target would be basically, the previous high. You see how that works? So if you were to come up here and bounce, your new price target, at the 1 is like 66, right? But if you come all the way back to 0, as you approach the 0 value, your price target then becomes the new top of the range. And yeah, you could overextend beyond it, of course. But that means then that you're also looking at the possibility of, this move. And you see how this has even lower price target on the smaller move. So at that point, we're looking at, if that were to happen, this would be very obviously difficult to deal with. But yeah, I mean, you could definitely get this kind of move again. No doubt, this could happen again. Another 500% move to like $9. But then more than likely, you're going to have to come back, quickly reestablish some support before you can move on. And we would probably see this range traded a little bit before we got back up here. And this is where you'd end up having your sign of strength, right? If you were going to. Now, if this ends up being like a longer trading range, that's also a possibility. So let's say we just get a small dip, we break out here, we move on, okay, cool. Well, we're done with that area. Maybe it starts looking a little bit like it did back over here in this region, right? And we start trading sideways in some of these pockets. I think that probably this area would be skipped over quite a bit. And I don't think you're going to see it run just like this. I think what would be more likely is that we would camp in this area for quite a while until we found some support. And then this would be because we've already come through here, this would probably get explored a little slower, right? Until we get to the top. I just said slower and I made it go straight up. You know what I mean? Like there's not much traded here. So I think this region would require a lot more exploration this time, ups and downs, more than likely. Okay. Now that notwithstanding, I'm not saying this is going to look just like this. In a bear market, you're talking about the possibility of, and just from a basic like Lycoffian standpoint, you may not like that, but this could become a rejection point, this high volume where you're not allowed to go in there, right? And then instead we explore these regions on the way down. A lot of retail would be selling off, right? Like, uh-oh, here we go again, right? And then you end up doing this really long, drawn out schematic, right? And eventually that ends up with you getting a real actual spring, right? And then it finally gets out of there. And at that point, yeah, maybe you move. But my point is like, you don't know until you know, right? And I think right now I'm looking at this $15 area, $13 area as a possibility for a stopping place. I'm looking at this as a possibility. I'm looking at this lower region right now, and I'm just waiting. And that's all I got for you today. So I hope you enjoyed it. Keep strong. I hope this isn't like beating you up too much, and I will talk to you later.